Well, hello, everyone, and welcome back to the Keeping It Real North Carolina podcast. We're so happy to have you here with us today, and I really think you're going to like our topic that we're talking about. We've got some exciting stuff on the table dealing with purchasing a home in today's market. But first, I want to take a minute for us to introduce ourselves. I'm Jennifer Franklin. I'm with eXp Realty out of Clayton, North Carolina. We've got Bob Persisepi with Blue Chip Real Estate in Southport. We've got Misty Sign, also with Blue Chip Real Estate, and she's out of Whiteville. And we've got Rachel Withers with the Jim Allen Group at Coldwell Banker, Howard Perry, and Walston in Raleigh, North Carolina. So, again, thanks for joining in, everyone. Yesterday, if you saw Bob's video, he touched a little bit on housing affordability. And that started me thinking, what does our audience need to know about buying a home? There's a lot of myths out there. There's a lot of rumors going around about what the housing market is like, whether you should or you shouldn't buy. And so today I thought that we would just take some time to dispel some myths, talk about the options that are available to buyers, and the danger in waiting to buy when we're waiting for all of the conditions to be perfect. So let's go ahead and get started. I've been in real estate for 11 years now, and majority of the time when I have people putting money down on a home, it's generally around on average 5 to 10%. Normally, if I see money being put down that's more than 5 or 10%, it's because people are rolling over, money from the equity of their home, or they're making a cash purchase. But that leads me to the first myth, which I hear quite a bit, is that you have to put 20% down in order to buy a home. And that just goes to what I was saying. I've never really seen that. And being in the business for 11 years, it always still shocks me that people still think that. What are y'all's thoughts on that? How do you think that myth got started?
I think it got started because if you have 20% equity in the home, then you have to pay your PMI insurance. So that's a good way not to save some money, but not everybody can afford 20%. So there is other loan products out there.
I've always been curious where that came from. And I think Rachel might be onto something where the 20% figure just developed because clearly there's lots and lots of loan programs that do not require 20%. As a matter of fact, more often than not, we see substantially lower down payments.
Yeah, absolutely. I agree. So that kind of brings me to the next topic, which is, what are some of the options that are available to people who don't have 20% to put down? I know that, again, in my years of business, I see a lot of loans out there, such as FHA, yeah, FHA loans, USDA loans. There's some grants out there. So, what have you guys helped buyers using those types of loan programs, and kind of what's your experience been? I know, Misty, your thing you're always going to say is just get pre-approved, right?
Just give me that pre-approval letter.
Because that's truly the first well, that's truly the first step, into buying a home. And, we've all got our trusted lenders that we work with, and we're going to put you with solid people that we trust. But again, what are some of the loan programs and the grants that you've seen people use when they're purchasing a home and they're not putting down that 20%?
We see in our market, I mean, there's still a lot. Well, obviously in coastal market, we see a lot of VA financing. VA loans are just a great loan for our veterans, zero down payment. You can still get zero down payment on USDA loans. Most of Brunswick County and Columbus County is under the rural development zone. So 100% financing is very, very common. A buyer can literally come into a transaction on a mainstream home with no down payment and just basically bring their closing costs to the table. So there's a lot of loan programs. FHA, 3.5% down. That's a great loan program as well. But, there's just so many different loan programs that just kind of shake away that whole myth of 20% down. In terms of grants, what's the one you were just talking about, Jennifer? FHA, $15,000 of
Mhm.
grant money if you go through their program. That's a really, really good loan program right there for the entry level buyer. But what do you guys think?
Well, I agree with the USDA loan. I know that most of Johnston County qualifies for the USDA. You've got a couple of pockets, that don't, and most of Wilson and Nash, and of course, the further east that you get. Rachel, what's your market looking like with USDA loans?
Well, it really depends in the region. Raleigh basically is not going to fall into the USD loan area, but on the outskirts, I feel like East Raleigh was falling into that area, and also north of 540 areas. The areas have kind of grown so much that I don't see USDAs that often in Raleigh proper. But the big thing for me is if people are looking in these areas and they need help with lending, I connect them with one of my preferred lenders that offers a down payment assistance so they can go that route.
Hmm.
It's a great
And that
program.
yeah, it's a fantastic program. I mean, I'm sure we've all had people that we've helped, purchase a home, especially first-time home buyers. I remember I had this one young lady and she was purchasing a townhouse in Raleigh. And this was back in probably 2016. And she didn't hardly have any money to put down on a house, but she knew she wanted to be, a homeowner. And so back then, NCHFA was only 8,000, but she used that money to cover her 3% for the FHA loan, and she bought that townhouse for, I want to say it was around like 168,000. Well, fast forward to 2022 and she sold that townhouse for 325. Y'all, a 28, 29, 30-year old, something like that, was walking away with about 140,000. Now, that's not going to be the story for everyone, but talk about a wise purchase, and she used the grant money that was out there. And I love stories like that.
I do too. That's a really happy story. And, all because of good, sensible real estate practices. I mean, just taking advantage of good financing, that's the key right there.
Yeah, absolutely. Now, Bob, you had mentioned before about cash offers. We're talking a lot about loans, but to our listeners out there who might be thinking, well, I don't need, a mortgage. I can just pay for, my next house either with funds I already have or, money I'm going to make off the sale of my house. What do you say to that?
Well, the first thing, of course, is if you're a buyer that's considering a cash offer, you do have to be prepared to source where those funds came from. I mean, you don't specifically have to say, here's my bank statement. You could get a letter from your lender that says, I've got sufficient funds for a cash offer. The North Carolina Real Estate Commission is very, very specific in page 5 of the offer to purchase agreement about what the definition of a cash offer is, meaning that if you do represent a cash offer in a transaction, you should, before signing the contract as a seller, make sure that you've researched and done your own due diligence to make sure the buyer is actually sourcing it from legitimate funds. And is it really cash? I mean, do you have to break a piggy bank, or do you have to take it out of your savings account, or do you have to liquidate assets? So some of those are disclosable issues, and they are material facts. So Mr. and Mrs. Buyer that are looking to pay cash, you can't really hold that information close to your chest because ultimately it's going to come out. Misty just had a situation where she had to explain that to a buyer who represented herself as a cash buyer, but as it turned out, it was so far from being cash because her method of converting into cash was selling another property, without a specific timeline on it. That's not a cash offer. So I'm really glad that the new forms that came out on July 1st with the North Carolina Real Estate Commission kind of flush that out a little bit. But be prepared if you're a buyer to make sure that you know where that funding is coming from.
And I would say too, if you're a buyer who randomly goes and sees a house that you like online and you call up a realtor, the way you're going to know if they are a true professional is they are going to ask you, hey, do you already have financing secured, or will you be using a mortgage to buy the loan? So don't be shocked when they do that, because we know that if you actually want to buy that house, you're going to have to provide proof of one or the other, whether that you've got
Yeah.
the cash, or that you're approved with the lender, which goes back to, what Misty and I were saying. When Misty was saying you need to be pre approved first thing.
Yeah, I mean, that's the very first thing I ask for when a buyer comes to me wanting to purchase, they have interest in a piece of property is where's the money coming from? Do you have a pre-approval? Is this cash? What's your scenario here? And they'll send me that pre-approval, and then that's when we start really digging in to find them and connect them with the right home. So that
It,
pre-approval is the key to the kingdom.
Misty, it's so funny you brought that up because to our realtor friends that are viewing our podcasts, I mean, you got to convince me, like, what is the harm in asking those two magical questions when you get a prospect on the phone? And question number one should always be, when do you want to be in your new home? And the follow-up question is, how do you plan on paying for your new home? I mean, I don't know why that would be such an invasive question when you're making the biggest purchase of your lifetime. I mean, that's just a simple question that's going to uncover everything.
Well, why would you go show somebody a $500,000 home if they're only approved for 300?
Exactly.
That's a tough question.
Well, and that's what I was thinking, you don't wanna take somebody out to see a house and they fall in love with it, and then they find out that they aren't approved for it, because that's just gonna bring so much disappointment. So, as realtors, and Rachel, I'm sure you'd agree, we're trying to protect you, when we ask, those questions.
Yes,
So
definitely.
yeah. Well, okay. So here's another myth that I hear when I talk to buyers sometimes, and I feel like we've probably all ran into this, is buyers will either say, "Oh, I'm waiting for the economy to get better," or "I'm waiting for interest rates to go down." Everything just needs to be perfect and just line up before I buy a house. But there's a danger to that. And the danger, in my opinion, is that house prices are just going to continue to rise while you're waiting for everything else to be perfect. So I did a little bit of research, and Lawrence Yun, he's the National Association of Realtors economist, and he says that home prices are increasing on average about 4% a year. Okay. So if we take that number and we look at, the housing prices in our market, and I would say on average, where we're all kind of at, I would say it's about 350. I think it's 400,000 nationally, but down here where we're at, I want to say it's about 350, and especially more to our buyers who are listening, who may be in that first time home buyers market. I feel like 350 is a really good number to work with. But if you take that 350, okay, and you say, you know what, interest rates are at 6.5% today. I don't want that kind of interest rate. I'm going to wait till next year and maybe the rates will come down some. Well, now your $350,000 house is now going to be a $364,000 house, right? I see Bob shaking his head. So you're probably knowing exactly what I'm saying and understand, what I'm saying with that.
On the short term, Jennifer, first of all, on the short term, if you're looking for interest rates to come crashing down in the next year, it will not be happening. Okay, we thought we were going to see a bump after Jay Powell left the Fed, and we've got a new Fed chair, which is awesome. But he's already saying, we've got to make some changes on the short term to our economic structure at the Fed, and we want to see inflation come down a little bit. So, getting down into the 5 range again, or even lower, it's possible that might not happen for another year or two. And, let's just call it what it is. Okay. When you're purchasing a home, let's just be straight honest. Okay. The stars will never be
They don't.
perfectly in alignment. Okay. They never will be. So if the answer to that question should always be, yes, it's a great time to buy a home. It's a great time to buy a home. It's always a great time to buy a home. I get a little passionate about that, but can I give you a statistic that might help you with that? So I did a little research at the beginning of 2026, and I went way back to 2015. And in 2015, and this is in my market, which is in the Brunswick County coastal market. Okay. If you had purchased a home in 2000 and you had waited exactly 10 years to sell that house in 2025, if you had sold it before the end of 2025, regardless of where the purchase point was is at the house purchase, whether it was a $200,000 house or whether it was a $500,000 house, it was aggregated data. A purchase in 2015 would have realized you a 111% return had you sold that same house in 2025. 10 years later. Now, I do not know where you can make 111% return on your money anywhere on planet Earth, but I'd like to know.
Well,
Because I'm gonna dump my money out of real estate and go into that.
well, it's a built-in savings account, and here's the deal, if you're renting right now, you're not building any equity at all. I say you gotta have a house to live in, you've gotta have a roof over your head, you've gotta have shelter no matter whether the economy is great or the economy is terrible, no matter whether the interest rates are 4% or whether they're at 7. You have to have something, sheltering you. And here's the deal. If you lose your job, let's just say worst case scenario, and you can't make your mortgage payment or your rent payment, you're going to get kicked out of both no matter what, right? So I mean, at least you had a roof over your head and you were, trying, to buy a house and be a homeowner and build that equity. The other thing that I think too that I see a lot of times with especially first time home buyers, but they say, well, I have this dream, I want this land and I want to build a house. They're envisioning the Dutton Ranch, right? And we know that it's champagne taste on a beer budget sometimes. And you have to work your way up to that. So, what I would say is, think about this. You're probably only going to be in that house, 5 years, maybe 10 max. It's just a stepping stone, right?
Yeah. I think what's the life
Perfect
expectancy?
example. I
Please.
mean, I'm working with a client right now. He purchased a home 2.5 years ago, and he purchased it for like 800,000. Okay. I was just running comps on it a couple days ago. Bob, you know this. This is $1 million property now.
Mhm.
I mean, he started out, he bought it in around the 800 figure. And I mean, the comps that I'm running are, he's in the almost $1 million range now.
Yeah, yeah.
So, that's just a perfect example. I mean, now is the time to buy. I mean, there are so many homes out there right now. And, just because it's at a certain price point doesn't mean that it's specifically that price. Because if you have a good realtor, they're going to negotiate for you to help you get the value of where that house is. And I don't know if people understand that having a realtor on your side and not trying to do it yourself, we're able to negotiate because that's what we're trained to do. We're trained negotiators.
That's a really
Exactly.
good point. That's a really good point.
Yeah.
Hey, 111% return, it's kind of
Yeah.
a no-brainer.
Yeah, you really you can't beat it. I did a video series earlier this year and we're going to post it here on our podcast page. But what I talked about was the cost of owning a home versus renting, and then your equity continually increasing each year. And I did an analysis of, okay, if you stay in a home a certain amount of years, but yet, I don't know, let's just say you had to replace your HVAC unit, or some big number like that. I actually did a video series about that. So we're going to link that down here so that you can watch that in case you're thinking, well, I don't know, if I can afford maintenance and all of that. I'm telling you, what you gain in equity is far going to outweigh that. Don't y'all agree?
I would agree.
Absolutely.
I would agree. I'm looking at Rachel nod her head. I'm thinking about maybe the exception was during the Great Recession in 2007 and 2008, but even those people came out ahead. The people
Hmm.
that were kind of upside down on their homes, even during the recession.
What I'm
So many
curious
people.
about right now is what Rachel is thinking because she's so quiet. So
No, I'm
I've
thinking
got
that
to know
too.
what Rachel Withers is thinking right now.
I'm just listening to all of y'all.
What's your
Okay.
thought?
Do you have 2 cents to put into this whole?
I just feel like you guys you're just saying it, so I didn't, I just agree.
Well, fair enough. This has been great information. And my hope is that our listeners will take it to heart and really think about the power that you gain in owning a home versus not. Because, like I say, you got to have a roof over your head either way. So, I just really appreciate it. Thanks again, everyone, for listening today. And if you find this information valuable, then please make sure to like and subscribe to our podcast. We don't want you to miss a single video or a single listing that we post so you know what's for sale from the mainland to the coast. And we hope that you guys have a great day. I know what I wanted to say. If there are any myths that you have believed about purchasing a home, drop them in the comments because we would love to hear from you what your thoughts are on all of this. All right, guys, have a great day.
See y'all. Thanks for viewing.
Uh,
Take care.